Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar upside challenge ended in a bruising session for the bulls, and with the reversal, the market is now looking back towards the bottom side of this range. The rejection or the confirmation to support the bullish case was at 71.70, and from the rejection has now put a bit of a dampener on that outlook. So therefore I feel the market may now take the challenge back towards the bottom side of the recent lows where this spinning bottom is. That's either from 70.85 or around 70.60, and let's see if the market can stage another rebound. If so, we still need to clear that top side, which is anywhere from 71.45 to around 71.70. Since the recent strong advance in euro, the market has lacked momentum. Nevertheless, the market's still all eyes on this Friday's non-farm payrolls. It is expected to see a further volatile session like we've recently seen over the last few days, with the forecast holding around 553,000 jobs added, that is, for November, with the previous number of 531,000 in October. The dollar index, which measures the greenback strength against a basket of 6 major currencies, is currently recaptured that 96 handle, but still I'd like to see a little bit more momentum. In light of the recent bullish divergence and also that bullish outside range day, the market needs to clear this level, which is somewhere around, I believe, around 113.45. If we can clear that level, then it may see the further scope towards 114 figure 5 and reassess. The dollar yen bounce hasn't really materialized into much and now threatens the support level again at 112.65, which was the recent objective. Keep an eye on these technicals, but nevertheless the market is still somewhat heavy, and if we do see a close under 112.65, that would initiate a move down to 110.70.80. Somewhere down about this level here. But like I said, let's see where the market closes. If it can maintain or retain its recent bullish bias, then we could see a move back to the level of 114 and reassess. Since that spinning bottom, little has eventuated. For some that aren't familiar with the spinning bottom, in general, any spinning candle should be treated as an indecision or a pause in the market. And from the recent rejection from that downside of around about 132.80, could see a bullish outcome and look back towards the top side of 133.45 to about 134.15. Now that being said, if we do get a close under 132.80, then that would give further exposure to the downside and look to where this stab was from this spinning bottom, which is roughly around 131.50.80. CAD yen, while the market is still lacking momentum and still at this point could see further risk to the downside to that target around 87.30.35. However, if we can manage to see a close above 88.65, then that will give for this initial short-term burst back up towards 89.40 and reassess. Looking at the pattern for gold, we can see over the last 8 consecutive sessions, 3 rejections closely around that 1,810.15 level. In light of the pattern, I'm still bearish and looking down towards this level at 1,757. If we see a break of 1,757, that exposes the next region somewhere close to around 1,000. Let me just put that in for you. Somewhere around 1,721 as a target. Although there was some bullish divergence, and this still is in respects, the recent stabs and these indecisive candles does give some concern that the bulls are lacking momentum and therefore could see that test down. Finishing up with oil, well, we can see that over the last few days the bears have been very heavily weighted on this market, and especially from that $10 drop, and then we've got initial candles coming into play and holding around that brief support, which is seen around 64.20, 40 area or 20.60. In light of the pattern, I still feel there's a little bit more downside and therefore could look towards 61.80.90 and reassess from there, as we may get a bounce off these lows that was last seen back in August. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the rest of the day.